Welcome back to Treadworn Journeys, your weekly compass for navigating the global exchanges. April 2026, and the markets are throwing a lot of data our way. We're seeing a fascinating tug-of-war between the unstoppable momentum of artificial intelligence and the gravitational pull of persistent inflation, US and UK opportunities. In the US, the S&P 500 is hovering around the 6,600 mark. The big story continues to be Nvidia, NVDA. Even in 2026, they remain the undisputed king of the semiconductor space. Their revenue isn't just growing, it's accelerating as AI integration hits the industrial sector. Risk analysis, NVDA, extremely high valuation. Any slight miss in forward guidance could trigger a 10 to 15% correction. It's a hold for the cautious, a buy for the long-term aggressive investor. Crossing the Atlantic to the UK, the FTSE 100 is showing remarkable resilience. Analysts are forecasting a record year for dividends, potentially hitting over £85 billion. A standout here is BAE Systems. With European defense budgets hitting 4% of GDP, their order books are full for the next decade. Risk analysis. BAE Systems, heavily dependent on geopolitical stability. If tensions de-escalate, unlikely in the current climate, the defense premium might fade. Japan and Europe opportunities. Now, let's look at the East. Japan's Nikkei 225 has had a rocky march, down nearly 9% this month, currently trading around 53,300. However, don't let the short-term dip scare you. Sony, SONY, remains a global powerhouse in consumer electronics and digital media. They are currently leveraging AI to revolutionize their gaming and sensor divisions. Risk analysis. Sony, vulnerable to yen volatility and consumer spending shifts in the US and Europe. In Europe, the Euro Stoxx 50 has pulled back to 5,600 levels due to rising energy costs. But this creates an entry point for ASML. As the sole provider of the machines that make the world's most advanced chips, they are a toll booth for the entire tech industry. Risk analysis. ASML, supply chain complexities and export restrictions to certain Asian markets remain a persistent regulatory hurdle for successful traders to follow in 2026. To be successful, we must study those who have mastered the game. In 2026, 4 names stand out for their vastly different yet effective approaches. First, the legend, Warren Buffett. His Berkshire Hathaway portfolio is still heavily weighted in Apple and American Express, but his move into Japanese trading houses has been a masterstroke. He teaches us that patience and buying quality at a fair price never goes out of style. Second, Ken Griffin of Citadel. Citadel has been a dominant force in 2026, particularly in market making and high-frequency trading. Griffin's success comes from massive investments in proprietary technology and talent. He's currently betting big on Nvidia and Amazon. Third, Cathie Wood of ARK Invest. After a volatile few years, her innovation-first strategy is seeing a resurgence. She's heavily focused on multi-omic sequencing and autonomous technology. While risky, her 26% return last year shows that her disruptive innovation thesis is far from dead. Finally, Jim Simon's Renaissance Technologies. Even after his passing, the system he built continues to exploit tiny market inefficiencies using advanced mathematics. Their focus on Palantir and Micron technology suggests they see massive quantifiable upside in data analytics. Here is the mid-video call to action. I have a question for the Treadworn Journeys community. What is your single favorite stock to hold for the rest of 2026? Is it a tech giant, or are you moving into gold and commodities? Let me know in the comments below. I read every single one, and it really helps the algorithm show this video to more investors like you. And hey, if you've found the risk analysis helpful so far, do me a favor and hit that subscribe button right now. It's the best way to support the channel. The impact of inflation on your portfolio. Inflation is the invisible tax that is currently defining the 2026 market. As of March, inflation expectations had edged up, causing bond yields to rise and yield curves to flatten. This is why we saw the global stock markets dip earlier this week. When inflation is high, the cost of capital goes up. This hurts growth stocks because their future earnings are worth less in today's dollars. However, it's a golden era for hard assets. Gold and silver saw a massive surge in early 2026. While they've pulled back recently, they remain the ultimate hedge. Energy is another sector to watch. Geopolitical tensions in the Middle East have pushed oil prices higher, which acts as a secondary inflationary pressure. If you're looking to protect your portfolio, consider companies with pricing power, those that can raise prices without losing customers. Think of companies like Coca-Cola or Nestlé. They can pass costs to the consumer, keeping your dividends safe even as the dollar's purchasing power fluctuates. Strategy for the remainder of Q1 2026. As we wrap up the first quarter of 2026, your strategy should be one of aggressive diversification. Don't just stick to the US. The valuation discounts in European banks and the growth potential in Japanese tech are too big to ignore. The successful trader of 2026 isn't just looking for the next moon mission stock. They're looking for balance. Keep 60% of your portfolio in high-quality core, the Buffett approach, 20% in growth/innovation, the Cathie Wood approach, and 20% in inflation hedges like commodities and real estate. The volatility we are seeing right now in late March is a feature, not a bug. It provides the entry points that the big hedge funds use to build their positions. Stay disciplined, watch the macro data, and never trade more than you can afford to lose. Final summary and key takeaways. U.S. market, NVDA remains the AI leader, but watch for valuation risks. UK market, FTSE 100 offers record dividends. BAE Systems is a strong defense play. Global views, Sony, Japan, and ASML, Europe, provide high-tech value on recent dips. Trader insight, follow the value of Buffett and the innovation of Wood for a balanced view. Inflation, use hard assets and companies with pricing power to hedge against rising costs. Community tab post. Poll question, with the Nikkei 225 and Euro Stoxx 50 seeing a pullback last week, what is your move? Disclaimer, I am not a financial advisor. This video is for educational and entertainment purposes only. Always perform your own due diligence before investing. Channel memberships are now available. Watch for the weekly videos dropping on Mondays and Thursdays. Leave a message in the comments. Like and share.
This is the stock market performance playlist, the sound of victory. Peace.